All righty, here we go. Okay, welcome everybody to the Calgary Real Estate Investment Forum. This week, our seminar is How Investors Buy Multiple Properties. We're doing this seminar because as real estate investors ourselves and real estate investors out there, everybody wants more than one rental property. So we're going to show you some tips and tricks and strategies how to go about it.
Yeah, and we've realized we've got a lot of new people joining us tonight. Welcome. If you're just joining us for the first time, my name's Azad Chandler.
I'm Tim Desautels.
Yeah, we've been doing this for a long time, Tim. It's been maybe 15 years, I think 15, 16 years doing these seminars. And we just realized we finally got to 6,163 investors on Meetup. And for the new people out there, we host these every 2 weeks and we absolutely love doing it. And you know what, Tim, you were just saying, when we first started, we tried to get to 1,000 people and then we're waiting to get to 2,000 and now we're above 6,000. So if you do like it, we hope you go to work tomorrow and tell your friends about us.
Yeah, it's great having all these people want to learn about investing in real estate. So how investors buy multiple properties, as we said in the intro, we're doing this because most of our investors want to own more than one. Once you get your first rental property, you get a taste of how to manage it, really the ease of what it takes to manage one of these things. Most investors want to move on to 2 and 3 and 4, and we're going to give you some tips today on how to do that and how to set yourself up properly, whether it's financially, whether it's through mortgages. Danielle's going to talk a little bit about that, and we'll just show you how our investors get multiple properties.
Yeah, and people that work with us, Tim, end up owning multiple properties just because, Tim, they do have that support to get them there. So don't feel that you're watching this and that's the end of it. If you feel like you want to move forward with something like this, that's what we do for a living. We help people buy the right properties. So it's a success, and that they buy more and more and more. We don't let, we always say this, investors run out of one or two things, one being cash and the other being the ability to get the financing. We don't let that stop us. If there's a will, there's definitely a way. And we've seen our investors do incredible things over the years.
Moving on, we're going to get into the meat of our seminar right now, how investors buy multiple properties. We said a little bit in our intro that, it's a goal of a lot of investors out there to get multiple properties. Well, we're going to go over a few things to maybe smooth the way to get there, to set up a plan, the right way to get there. And then once you are there, what to do.
Yeah, and we need to stress to everybody out there that it really only takes 3 properties. We want to really stress this. We've ran the numbers. We do this for our investors when we sit down and work out a financial plan using real estate for them. It really only takes 3 properties to make a huge difference to your life. And so if some people come in, Tim, they want to own apartment buildings and 20, 30 units, which is fine. You have to start off somewhere. You have to start off with one. And Tim, we'll get into it.
Yeah. So before you even get started, like Azad's saying, it's not going to be as easy as you think, and you need to be prepared to put in the work. Because what you're really doing is you're starting a little business. You're starting a real estate investment business, whether it's just one rental property or whether you want to be a mogul out there and own 50 doors. You need to be prepared to put in the work and start that business. People think that, these guys have been an overnight success because all of a sudden they've had all the success at real estate. But really, when you dig down into it and when you start with your research and then you get the right mortgages and then you buy the little properties and you turn them into bigger properties, it actually takes quite a bit of time. And time is the thing that you're going to need to get your empire going.
Yeah, and that's what, Tim, how we built our portfolio over the years. First key thing is to set goals, Tim. We always do a goal planning session with our new investors just to see where they want to end up and how we're going to get them there. But time is what it takes, because what happens is what's happening right now in real estate. This magic thing, Tim, within every 7 years, this magic thing happens where you get this appreciation. And we've invested, Tim, there was many years where we weren't getting appreciation, but we were still getting cash flow and we were still getting our mortgages paid down. And that was good enough for us. And then you go through something like this right now, like the townhome market going up 19% within a year. It's just crazy. And to us, that is a bonus. But what that bonus does for you is it helps you utilize that equity, refinance those funds, and take those funds, which are tax-free, take those funds and put them into another property. And Tim and I must have bought multiple properties doing it this way, and we bought our family homes this way too. Just simply taking the equity out of our investments and putting it down on other properties. So we want to stress that it starts with a goal, and then it basically takes time to get you there. There are other ways around it, which we're going to get into through the next slides.
Yeah. So the number one thing you got to do is assess your current financial situation. How much capital do you have? Do you have enough for a down payment on even one property? What kind of capital is it? Is it liquid right away? Is it cash? Or is it in stocks and bonds that may take some time to sell? Is it in an RSP that may take a convoluted way to get the money out of that and put it into a real estate investment? That's another thing that we can talk about with Danielle in the future, is how to take that RSP money and use it for real estate investments. And also, do you have access to credit? What we mean by that is, can you get a mortgage? More often than not, younger people have trouble getting the mortgages for these expensive rental properties. So, you have to explore other ways to get it. You have to maybe use someone else's credit, which we'll probably get into on another slide, or we will get into on another slide down the road.
Yeah, and just speaking to young people out there, there are options with, maybe investing with family, like mum and dad. And we've seen that many times. Parents love to help their kids out, or if it's not your mum or dad, it could be friends that you have or colleagues at work. We had one investor, Curtis, who worked, we bought many properties for Curtis, and actually he ended up doing owning 17 properties. And most of the people he bought with were either from his hockey team he played for,
baseball team,
or his baseball team in the summer. So, it is easy to do, but you have to put, a foot forward to move in the right direction to make it happen. And just being on this call tonight, we've put many of those joint ventures together over the years, and the success we've seen is absolutely huge. We've seen people go from renting, Tim, to owning multiple properties down the road just by doing joint ventures. So we want to stress that as well. And you have to keep in mind, we have one investor that owns close to 500 units, Harp, that comes in and does a presentation for us. And you know what? Investors that are that huge, they still have the same old problem that maybe an investor starting off has, and that's either running out of cash or running out of the ability to get financing. So you can't stress about that. There's ways around it, and our job is to educate you on how to do that.
Yeah, so figure out what your current financial situation is. Make sure that you have good credit. If your credit isn't that great, work with somebody like Danielle to get that number up so that you can qualify down the road. Once you know your current financial situation, you will know what options are open to you right now and what you have to work on to get other options. Second thing you want to do is you want to get educated. And most of you are, a lot of you are experienced real estate investors on the call today. If I put a question out there, how many of you have read real estate investment books? How many of you have taken courses? How many of you looked online and researched online? Probably most of you have done one or two of those things. That's what we've done all along. Get educated.
Mm-hmm. And the best thing about getting educated, it helps you take action. And that's why we do our seminars every second Tuesday. It's to help you move forward. We've seen so many people have analysis paralysis over the years. And then, you know what, there are some books out there, like Rich Dad Poor Dad was a book that changed our lives. But the thing about Rich Dad Poor Dad was that it didn't actually give you the meat and potatoes that you need to actually move forward. We went on to write 2 books, which we will showcase at the end of this presentation, that could definitely help you move forward. So educating yourself is a key factor in making sure you're confident enough to take something like this on.
Yeah, and hang around like-minded people. Just by attending this real estate investment seminar, you're hanging around other people who are interested in real estate investment. If you want to do real estate investing, you're not going to hang around a hiking group and expect to invest with those people. You need to surround yourself with people who are also interested in real estate investing, so you can bounce ideas off of them. You can, ask what their experience is, ask how many properties they have, see if they have a plumber that, you need. If you're around those people and you take the same courses, you go to the same groups, the same seminars, you're going to be that much further ahead because you're going to move forward as a group.
Yeah, a great question in the chat here from Rushi. I have 20K to invest pre-construction or resale. This is a great question because we feel we can definitely tell you that we've seen developers these days, they're factoring in the appreciation into their sale price. And what we mean by that, they're actually selling properties that when they close, maybe they close in 2025 or 2026, the value is where people are buying it at today. So you have to watch what you're buying. If it's pre-construction, you have to make sure that you are getting a deal, and that product is going to appreciate even more by the time you take possession.
Yeah.
So we like pre-construction, don't get us wrong, but you just have to make sure that those numbers are there. And then the resale factor, yes, you're getting the property immediate. And real estate, there's only a few things you really have to focus in on when it comes to buying real estate, is spreading your money around. So if I was you and I had 20K, I would either be looking at doing, if possible, 5% down. So I would be moving into a property, maybe move into a property, add a suite to the basement if you can, where you're adding more value, and then trying to refinance that money out at a later date. Maybe take a 3-year term on your mortgage, and after the 3 years, you can definitely refinance that property and move forward. And then the other thing is buy into areas that aren't crazy right now. So Tim and I specialize in this. I mean, last year, Tim, we bought so many properties in Bowness, and Bowness was this sleepy little community that was just doing okay. And this year it's gone up $100,000. And why were we investing in Bowness a year ago? It's because we knew that we knew that they were building new properties in there, and people were knocking down properties, building new, and we just knew that there was infrastructure going on in Bowness. They redid all of the roads and the sidewalks. They put in the farmers market just across from COP. They redid all the streetlights down in Bowness and stuff like that. So we knew the community was turning around. As an investor, you have to look at little pockets like this, and we're seeing this in other communities around Calgary that you can get in cheaper because no one's buying in there right now. And then by the time next year or 2 years or 3 years comes around, that's gone up as well.
Yeah, and with all the influx in population, I'm going to stress this again. Even these areas that are sort of marginal right now, they're going to go through a bit of a growth, a bit of change, a bit of gentrification. And there's pockets in every single neighborhood in the city right now that we would advise people to invest in, because they're going to reap the rewards of the appreciation that's going to happen down the road.
Yeah, like just for an example for you out there, we know the townhouse market. We're doing a full seminar in 2 weeks' time on townhomes, where to get the best deals. But just the condo market behind us, we know for a fact that these condos behind us, they were selling upwards of 460, 470 back in 2008, 2009, or 2006 to 2008, pre-construction. You can still get those same condos for 410, 420, and we know those prices will come back to the 480 because they've already been there years before. And we know it is because of the population coming in, and we know that they can't build that same product for that price right now. We know that a brand new 2-bedroom, 2-bathroom townhouse for 1,000 square feet start at $650,000 in downtown Calgary. So if you can get one that's 10 years old, that is the same square footage for 410, 420, we know there's an easy $100,000 to make there within, a 2 to 3 year period. So that's where that condo market's going. And that's just one sector of the market we're talking about.
Yeah. So moving on here, the third thing you would have to do is write a real estate investment plan. We've done a whole seminar on how to put one of these together, but basically what it is it's a pro forma of how your real estate investment is going to do, how you're going to raise the money, how you're going to get the mortgage, how you're going to place the tenants, and how you're going to manage that property over the life of the property. If you already own real estate investment properties, you can use one of them as an example to either attract joint venture partners for your next one, or you can use it to track how your investments are doing. So this real estate investment plan, when we first started, of course, it was mostly just on paper. We had binders and binders and binders of these plans with our investment properties in them. But right now, everybody puts it on in a digital format. You know, they have their spreadsheets, everything written digitally, so that if they want to attract a partner, they can fire over this plan as an attachment. And it's it's a very quick way to spread your business plan to other potential investors.
Yeah, and I could honestly tell everybody out there, when I started in real estate, my plan was to get to $5 million worth of real estate. It was as simple as that. I didn't care what real estate I owned. I owned real estate in 2 different countries, but that was my plan. And I just needed to work out a way to get there. And if you've read our book, Fearless Real Estate, when I got there, Tim, the market had some corrections, and you have to understand that, and this is why we teach what we teach, is because we made those mistakes. I accelerated it to the point where I got to $5 million worth of real estate, but I wasn't cash flowing. So when interest rates went up, I got hurt and I had to offload. So the key factor is, when you do make your plan, is work out the total book value of real estate that you want to own. If it's 1 million, if it's 2 million. And the best thing about real estate, in 25 years time, after you buy that property, if you hold it, it could be paid off, right? And that is unbelievable. To get to $2 million worth of real estate, most of our investors, Tim, on average, get to $2 million worth of real estate within a very short period of time. So it is very, very doable. But you have to work out what your number is, what you're comfortable with, and then work out how we're going to get there using the least amount of money possible. And when we say that, if it takes moving into a property to put 5% down and maybe house hack, have someone living with you or in the basement or whatever it is, so you could save up for your next one, you have to do what it takes. And you might be already in a situation that you already own a bigger home. Then it takes working out what segment of the market is going to create the most amount of equity for you, so you can grow your portfolio.
Yeah, and there's a question in the chat: on what online platforms do you source deals, verify rental value and rental demands in Calgary or Canada in general? The best source to find out what properties are selling for, as a general rule, is the MLS system. It only gives you the active prices. It doesn't give you the sold prices. You really need a good real estate investment realtor who can, source out and cost out what the average property in an average community is going to sell for. We have access to all of that information. Best place to find rental amounts is on a rental platform in Calgary. Here, it's either rentfaster.ca or Facebook Marketplace. It's different in different centers around Canada. In the States, Craigslist is a big thing where everybody finds the rental rates. Rental demands, again, look at these rental sites, see where most of the properties are for rent. If one side of the city has nothing for rent, maybe 1 or 2 properties, if the other side of the city has tons for rent, you know where the rental areas are going to be. You need to do research in the area that you want to buy.
Yeah, someone's saying Honest Store, I've heard of them. House Sigma, I haven't heard of them. I mean, Tim and I have been selling investment properties for close to 20 years. We know exactly what properties they're renting for. We actually get surprised sometimes, Tim. We have a client that we bought a property in Thorncliffe, renovated the basement suite in Thorncliffe, and he's getting $2,000 a month for his basement suite. So this is crazy, and it's got a huge double car garage that comes with upstairs. I think total he's renting upstairs for $3,000. Total rents for $5,000 per month. He's cash flowing, and this property was just bought. So if you're sitting there and you're thinking, and we're going to get into some fun stuff shortly about cash flowing that we've just recently seen our investors do, but You know what, you can definitely cash flow in this market. You just have to pick the right properties. And you know what, suited properties, they're even, Tim, hard for us to buy right now.
Yeah.
Finding that product for our
Demand
clients.
is very, very high for suited properties right now.
Yeah, we're actually buying properties and putting our own suites in. We have the contractors to do that. It's way easier to do something like that than getting to multiple offers and pay too much for a property.
Yeah. Okay, we got to move quickly here. The next thing you want to do is you want to take action. Start investing as soon as you can. Get out there and buy that first rental property. If you don't have the money for a down payment, you may have to raise the money for a down payment. Airbnb arbitrage is a great way to do that. What's Airbnb arbitrage? It's when you rent a property and then you put it on Airbnb, and you're earning income that way. What you do have to make sure, though, is that you get the original landlord's permission or consent.
Yeah. So, and another thing you can do right now, if Airbnb takes up too much time, because it does, we have investors that do this full time. Airbnb. One of our clients has, I think, 15, 16 Airbnb properties. So, but what people are doing now is subletting. So they're basically getting properties for rent if you can't buy, and furnishing them and then renting them out as executive rentals. Because as you can see with Tim's slides initially, how many people are moving here, they don't have furniture. What was it? 32,000 people moved from overseas to Alberta. So that demand for furnished rentals, and a furnished rental, just so you know, an average 2-bedroom rent right now is 2,200 downtown Calgary. That's for an older unit, okay, not a newer unit. The newer units are upwards of 2,800, but a furnished property can go all the way up to $35,000 to $4,000 per month, and these companies will rent them for their employees. So you can make money on the spread of what you're paying the landlord for, and you could pocket that money for, you know, what your deposit for your next property. Yeah,
and other ways to make some quick cash is wholesaling your rent to own or agreements for sale. This is where you put a property under contract. You can either put a rent to own tenant in there where they're going to give you initial deposit, they're going to charge or pay you extra rent credits over time, and then you're going to eventually sell the property to that client for at an agreed upon price. These strategies are alternative strategies. They're income earning strategies. So if you don't have that down payment, you may want to do these alternative real estate investment strategies to gather that cash so that you do have a down payment down the road and you can start buying your own rental properties.
Yeah, so we have a question here. We'll be touching base on buying your very first property. So I can definitely tell you if you're on a base salary of 50K. So let's just take it back just quickly for a second here. Buying your first property, it may take 2 incomes to do it these days. And we want to really stress to everybody out there, when I first got into it, Tim, I owned properties like on a busy road, 14th Street. I owned properties out in the Northeast where, you know, I lived on the west side of town. I bought whatever I could. And some of these properties were run down, and you know what? They had to be fixed up, and I made money. So first is not stressing about the type of property. Okay. It's just getting into the market. If you're on an income that doesn't support getting financing, it may take 2 incomes. And if it's basically, if you don't have a partner, we would recommend doing joint ventures. Okay. And for someone out there who's just getting into their first property, that might sound crazy, but we walk our investors through this process step by step. And what that takes is finding another investor. It could be a family friend, it could be a work colleague, it could be someone on your sports team, like we were mentioning about Curtis owning 17 properties. It takes buying a property together, someone getting the financing, someone putting up a deposit, and we make sure it's 100% safe. So it's a success. And we've helped people, you know, do this, Tim, and end up owning multiple properties down the road. So that's what it might take if you're earning 50K.
Yeah, and that might require you to raise capital. You may have the ability to get that mortgage, but you don't have the down payment. It might be the other way around. You might have the capital, but not the mortgage. It's all about attracting that joint venture partner who can help you get that property so you're both owning 50% of the property. Let's back up one slide a bit, and we were talking about if you don't have a vast amount of capital. This young lady in this slide here, she's jumping for joy. She bought her first rental property. Now this property behind her, it's in Ogden. It's in that section of Ogden where it's like a bunch of back alleys, and there's all these properties that are attached to this back alley. So it was in rough shape.
Yeah.
It was very rough shape. I think she bought it for like $260,000.
It was the cheapest house in Calgary, this house here. This is a pure success story. So she bought it on her own.
Yeah.
And moved into, we were nervous for her because she did have a boyfriend, but the boyfriend was in London and he was moving over here and she was living there by herself, and we were nervous.
Yeah, because it was a rough house in a bit of a rough
area. A pocket of where it was in Ogden. Anyway, she bought it for low twos, lived in it for 4 or 5 years, renovated it, did everything to the house, finished the basement, and sold it for $550,000. Now she's moved to a rural town and is repeating this process, buying the cheapest property she can and going through renovations. So what we're saying is, you know what, we're there to guide you through this whole process, right? And she simply took action, right? She came in, she met with us. We actually have photos of her meeting us, and she got this house under contract, a house that nobody wanted, and walks away now with $300,000 after all said and done. So if there's a will, there's a way, and we're here, and that's where we're different, a little different than other real estate agents. We will actually help you put a plan together to actually move you forward.
Yeah, and she took a chance on herself, and that chance paid off. And it was a rough house in a rough neighborhood, but she got to know all of her neighbors, and they kind of took her in as one of their own. And she never had a crime issue in that house for 5 years she lived there or something like that.
Yeah.
So she just took a chance on herself. And in real estate, you can make huge profits if you're willing to take that action and take that first step.
Yeah. We'll go to the next slide. I'll just quickly burn through this question here. Someone's saying he's on his 5th property and it's hard to get lenders to lend him money. How did Curtis get to 17? So we can definitely tell you, because Tim and I got to over 25 houses. So the only way you can do it is through joint ventures.
Yeah.
So that's getting partners to qualify for those loans, or through a syndication. So syndication is buying small apartment buildings. We're looking at building, it's actually cheaper now to build your own apartment building than to go buy one. So we're actually looking to put a syndication together to make that happen. So the only way to buy multiple units above 5, and Tim, back in the day, 8 units, 6 to 8 units was the magic number. The risk tolerance for banks now has come down. They don't like to see investors own more than 4 properties or 5 properties. So there are different ways to do it. Scotiabank will go even more, but they have a program where you have to have a certain amount of equity in those properties. Once you have that certain amount of equity, and I think it's a 60-40 split there. So you have 40% equity. They will then be happy to lend you again. It does get more difficult. You do have to work with a specialized mortgage broker. If you're going into your own bank, they don't know what to do with someone like yourself. Okay, they look at you. I remember going into a bank and saying that how many properties I owned, and they didn't even know what to say to me. So you cannot do that. You have to get a specialized, that's why we work with Danielle. You have to have a specialized mortgage broker that knows to go to multiple different lenders to get you financing.
And that financing has to be set up the right way. You can't just go in there and try and get the best rate on every mortgage and have your bank do it for you. You need to set it up so that the mortgages will work, that the mortgage companies will sort of coexist with each other. You can have many properties with a different mortgage on each one, but it has to be set up properly, and it has to be set up by someone with the knowledge to do it. So a very good real estate investment mortgage broker. And you have to also be timing the term length and be timing be aware of the mortgage rates. You got to be aware of your cash flow, so you're not blowing everything out of the water. So working with a qualified mortgage broker
Yeah.
will get you ahead way faster. And like Azad said, the days of having it easy to own 20 properties, those are long gone. It can be done, yes, but you're going to use a combination of your own credit and partner's credit
Yeah.
to get there.
And you know what, Reg, like you understand what we're talking about. I just kind of went through all that. You know what, at the end of the day, it's perfect you got the 5 properties, because when you get to 5 properties, the best thing about that is you're going to use that, the equity, or what would you say, Tim? You're going to use that as collateral basically to now form a corporation and basically have the underwriting done to buy multiple units using what you already have. So you've got a good base there, and that's basically the stepping stone to get into buying small apartment buildings and then moving on to commercial and industrial sites if need be. So
yeah. We skipped over a question here. It says, are there property tax or tax sales or auctions in Calgary and Canada in general? There are tax sales, but realistically, in a city like Calgary, very, very, very few homeowners are going to get so far behind in their taxes that the city is going to have to sell their property out from under them. There's companies out there, wholesaling companies, that will help people out of that problem. People will get smart enough just to put their house on the market. In a market like today, even if it's run down, beat up, they can sell their property. Someone will buy it. So that tax sales on the courthouse steps that you read about, that they have courses on in the States, that doesn't really happen up here. So while we've seen the odd property being forced into a sale because they're behind on their property taxes, it's so infrequent that we rarely come across.
yeah, and then someone's just asking with the property management piece. It's funny enough, we're announcing tonight that we are offering property management services. But honestly, when you are buying these properties, if you're buying it through us, we're only buying properties that we know have 100% occupancy rate. What does that mean? We aim for no vacancy. We only buy properties that we know we would have a lineup of tenants for our investors to choose from. So you need to buy properties that are in demand, that are appealing. We go through full seminars on what to look out for with these properties. But normally with the investors that we know that own apartment buildings, normally they have a resident manager. So the resident manager normally lives in one of the apartments, and he gets a break on his rent to actually fulfill the duties as a property manager within those buildings, or they do hire out property managers to look after those buildings. And we have had investors like even Tim back when we were managing all our properties. I mean, if you have the right properties, if you have good properties, we always say this, if you have good properties, you're going to get good tenants. So at the end of the day, that's what it takes, is to get the right property straight off the bat.
Yeah, and we always recommend that people manage their own properties, at least to start off, so they get a better understanding of how the physical aspects of the building, whether there's a furnace that clunks and things like that, things that tenants may complain about in the first year that they can rectify before they turn it over to a property manager. And in the end, it always saves you money, because property management fees can be quite high right now. And the big property management companies don't really want to deal with the investors that own 1 or 2 properties. It's just not to scale for them. So managing it on your own is what we advise, but if not, we have a solution that we're going to talk about a little later.
Just to answer today's question, do we find properties that we can add value to by renovating? That's what we specialize in. So most of our clients, some are buying turnkey properties, but a lot of them are buying properties that they can add a basement suite to, or they can fix up. We actually guide them on every step of what kind of renovations to do, what kind of flooring to put in, what kind of paint to use, what kind of appliances to put into their property. So we walk our clients through every step of that process.
Okay, we skipped over a couple of questions here. Is there a website or forum to find prefabricated homes or apartments? There may be, but if you're talking about prefabricated homes like mobile home parks and stuff like that, there's so few of them in Alberta that I don't know if anybody's got a website about them. If it's modular homes, which people, you make in a warehouse and then you ship out to site, there are companies that do that. They mostly deliver to rural areas where it's hard to get the builder out there. But as far as the Calgary market goes, most of it are dedicated home builders, whether they're large or small. And you can deal with them when you're buying or you're doing pre-sale. Do you have an accountant to recommend for real estate investors, someone who can help minimize taxes paid each year? Yes, we do. Reach out to us after the seminar via email, and we'll send you his contact info. He's a great accountant, and he works almost exclusively with real estate investors.
So if for the new people out there, we have a full team of accountants, lawyers, home inspectors, contractors. We've been doing this for close to 20 years. We have assembled a team that our investors, when they work with us, which is free, they get to use.
Yeah, Chad was just clarifying pre-construction instead of is their websites dedicated to pre-construction? Basically what it is the home builders or the developers, they will have a website. If they're putting up an apartment building, they'll start that a year, 2-3 years out, and they'll try and do pre-sales for the units. Same thing with the home builders in the new construction areas. You just visit their show homes and you go about it that way. Okay, moving on. How do you raise your cash flow so you can buy over and over and over again? Cash flow is one of the most important things that you're going to want to focus on so that you can acquire a number of properties. I can tell you, and as I can tell you, if you're not cash flowing overall in your portfolio and some shock hits the market, like the world financial crisis in 2008, and you have suddenly 8 properties that are vacant and you have to make 8 mortgage payments, but there's no rent coming in, that's quite a shock. So you want your overall portfolio cash flowing so that you don't go through those shocks like we did.
Yeah. And so as we say all the time, we made mistakes when we started. And first off, every property should have a cash reserve of roughly 3 months rent. So that's what you should be aiming for. You should be building that up for each property. And once you get to that point, then you can use that cash flow for your next property, right? I mean, in the beginning, Tim, I was just using all that cash flow to keep buying and buying and buying, and then the whole thing blew up at one stage, right? So you know, at the end of the day, that would be our structure right now for our clients, is to say, hey, depending when they come in, how much money they've got. But the aim is to eventually get to 3 months worth of rent. But let's just talk about cash flow quickly, because we know interest rates went up. We know rents have gone up as well, but there are different ways. And we heard of this great strategy just yesterday. I came into the office and I was telling Tim about it. I couldn't believe people were doing this anyway. There's this new thing called co-living, and it's kind of like student rentals. And what happened here in Calgary is student rentals hit about $1,000 to $1,100 per room. And this hit, Tim, it would have been mid last year. We're getting it in the newspapers.
Yeah.
The students were living in their cars because they couldn't find accommodation. So what happened is rental rates for students went up to $1,000. As soon as that happened, we now know that people are renting homes out, renting bedrooms for $1,000 per room. And so we've seen investors now adding bedrooms to living spaces in their home. So they may have had a living room upstairs or a living room in the basement. Well, they'll wipe out the living room in the basement and create another bedroom or 2 bedrooms.
Yeah.
And now they've got a 6-bedroom home, and they'll rent out each house. Each room for $1,000, and cash flowing $2,000 to $3,000 per month on these properties. So that will get you very, very quickly to creating a deposit to get another property. And because our investors are moving from one property to the next, it allows them to put 5% down onto the next property, right? So they can get ahead very, very quickly. But other ways you can do it, Tim mentioned rent to own. We talked about furnished rentals. They increase the cash flow. And now Airbnb, which is a little bit more management on your end, but you can definitely make enough cash flow to help move you forward as well.
Yeah, and you can put a basement suite in. There's another source of rental income. You can, like as I said, rent out rooms. You could rent out your garage separately if you have a detached garage. You can rent out an RV spot. If you have a parking pad in the back of your property, we've got guys that are renting these places, just a spot in your parking pad for $100 a month for someone to park their RV on in the wintertime. It's just crazy what people will pay for these things. And another thing you want to do is you want to keep an eye on the rental rate in whatever neighborhood your property is in. Because we've had very experienced investors who had their rental rate of a certain amount, their mortgages are, really, really low, so they're cash flowing quite well. And they come into us and we're just discussing the market and what's happening with their property over time. And they'll find out that the market rate for the rent in their particular neighborhood is over $1,000 higher than what they're charging, and they're just surprised at this. And anyone new to the market knows that over the last 3-4 years, rents have gone crazy in Calgary. So you need to keep an eye on that so that you're roughly around the market rent. Now, we're not saying just jack your rents all the time. If you have really good long-term tenants that are looking after your unit, you might want to charge them a little lower than market rent so they stay on to look after your property. But if you're getting new tenants in, make sure your rents are at market rate. Yeah.
Yeah, make sure. And you know what's funny for everybody up there? Tim and I see people selling their properties that we go and buy for our clients, and they may have to come with tenants that are on the low rate. Like sometimes we go into properties and we're like, how much are they paying rent? And it would be so low, but no one would buy the property. So we actually get a deal on the property by assuming the tenants, and we factor all of this in, that we're going to take these tenants maybe on for 3, 6, could be 9 months, could be a year. But the property is still worth it because we know at the end of that time that we're going to move those people out, we're going to renovate the property and then jack the rent to new tenants, $1,000 to $1,500 more in some cases. So don't be afraid of taking on tenants that may have lived there for 20 years and got a deal. At the end of the day, it's your property. You give them enough notice, you can move them out, renovate the property, and put new tenants in.
Yeah, and the last point here is make sure you maintain your property. Nothing's going to make your cash flow fall as if your property falls into disrepair and you can't charge market rent because it starts to get beat up. So make sure you're doing the maintenance, you're making everything, everything still works. All the light bulbs have been changed, all the furnaces have been maintained. As long as you're maintaining the property and it's of average condition, like the average property in whatever neighborhood you're in, you're going to get market rents. If it falls into disrepair, guess what? Your rental rate is going to fall as well, and your cash flow is going to go down too.
Okay, quick question in chat. Is it any legal requirements adding bedrooms? Actually, adding bedrooms, the only legal requirement to call it a bedroom is that it has to have a window and it has to have a closet.
Yeah.
That's the only requirements. Where the requirements do come into play is when you're creating another suite in a property, meaning another kitchen, another completely different living area. Then there's legal requirements, and the city is actually paying you right now $10,000 to create a legal suite in your property to create more density out there. So the city is actually encouraging you to do that, but then there is legal requirements with ceiling finishings, with smoke detectors, window egress, and all sorts of things that we help our clients with. But adding bedrooms, that is the only requirement, is a window and a closet.
Okay, the next thing we're going to go on to is to try to create instant equity with each purchase. Well, what does this involve? This involves trying to get that property below market value. And like Azad said, there are tricks that we can use even in a market like today's where there's multiple offers, properties are selling way over list price. If a landlord is selling owner is selling his property with tenants in it and the lease goes for another year and that lease is $400, $500, $600 below market rent. So any new investor who buys that property can't cash flow. Well, you negotiate a lower price and thereby creating instant equity in the property.
Yeah, and one category right now, we're talking about condos. So brand new condos downtown sell for $650,000. Original condos, we're talking 1980s built that will be in original condition. They sell right now about $300,000. Earlier this year, I could tell you we were picking them up for $250,000. It's already gone up $50,000. That would be 1 bathroom, 2 bedroom, 850 square feet. So we know that there is a massive, massive difference between 650,000 brand new and 300,000, original condition. Now, to turn that original condition property into brand new would cost you in renovations roughly $55,000. Okay, so we know that with the market going up in the condo market, that would be an easy way to create equity and get you ahead just with that solution. But there's all sorts of properties you can do it to. We're doing the seminar on townhomes in 2 weeks, how to make money. We were in a townhouse, Tim, the other day where we could add another bathroom into the property, and the extra bathroom would have created at least $25,000 in value there, and it would have helped us get more rent for that property. So we love those older townhouses, because if you go into newer townhouses, say in Sage Hill or down all the way down south, Tim, in the new communities, they're over $500,000 right now, where, Tim, those older townhouses today are around 330 to 360.
Yeah.
So there is a massive difference in townhouse prices, and especially if you are closer to downtown, that's where people want to live.
Okay, we got a question here. Is it possible to convert a single family house to multiple occupancy house, like converting parlor to a room, or add more rooms to the house, or renting a room on a room by room basis? Yes, you can do all of that. It's what student rentals are. What people will do is they'll buy a house with 3 bedrooms up, 3 bedrooms down, or no bedrooms down. They'll put 3 bedrooms in the basement. They'll have a kitchen up, a kitchen down. As long as each suite is, has the legal requirements to be a suite, then yes, you can put as many bedrooms as will fit in that house. The larger the square footage, the better, actually. What we've seen people actually do, and it's very creative, is create executive student rentals. So they will have, the kitchen up, the kitchen down, 3 or 4 bedrooms up, 3 or 4 bedrooms down. They'll have laundry, more than one set of laundry. So they'll have a set of laundry for upstairs and a set of laundry for downstairs. Some of these places even have an ensuite for every single room. So the more elaborate you can make these, the higher the rent you can charge for each room. Now, and the one thing I do have to stress is that basement has to be legal, so it has to have the legal requirements to be a separate suite. But yes, you can do that.
Yeah, I mean, we've got one investor, Chad, who has student rentals, and he just rents to female students. Yeah. And it's a huge success. They're all female student rental housing. He owns them near Mount Royal University and Calgary University. So can it be done? It can be. And student rentals, yes, is a little bit more management, but the cash flow is amazing on these properties. And then because you're buying closer to the university, guess what? The appreciation on these properties go hand in hand.
Yeah. This next slide, buying properties without qualifying for a mortgage. This goes back to our discussion about joint venture partners. If you can't qualify for the mortgage, you can get a joint venture partner who can. We do a full seminar on how to set this up, how to structure it so that both parties are protected legally, both parties benefit equally on the appreciation side, the cash flow side. There are many, many different ways to set up a joint venture, but basically what it is one partner brings the cash, one partner brings the mortgage, and you jointly use both of those things, and each one owns 50% of the house.
Yeah, next one is VTBs, vendor take-back loans. This is a great way for people that are selling properties to save on taxes. We found this loophole just a couple of years ago that our investors were approaching sellers that had properties on the market for a long time that couldn't sell them. Maybe they were asking too much money. And at the end of the day, if a seller is giving you a vendor take-back loan, so it's basically where you're not going to the bank, the seller now is holding the mortgage for you. Yeah. So if you're buying a property, say for $600,000, he may want $40,000 up front, which is fine. And then the rest would be as a vendor take back loan to you. So you're actually borrowing money off the seller. They become the bank. And the reason why it's beneficial to them is if they sold that rental property, they would have to pay capital gains tax. But if they sell it back as a loan, they're only paying tax on what they're making in payments each year. So it can save the seller a lot. Moving on to agreements for sale. I mean, agreements for sale, Tim, I thought was going to get a lot more traffic with this going into with the interest rates and mortgages coming due. Agreements for sale is when someone can't afford their mortgage anymore and you simply go in and take over their mortgage. You would pay the difference between what the property is worth and what the current mortgage is, and then you would basically take that over. At the end of the term, there has to be an agreement where you would either sell that property. We have investors that are renovating those properties for a profit and flipping them because now they're not getting a mortgage. or you would refinance and put your own mortgage at the end of that term. So that's agreements for sale. And then lease options. Tim and I have acquired over 100 lease options here in Calgary, put the deals together where you're actually going out there renting the property, but you have an agreement in place to buy the property. You have the option in place to buy the property or not buy it at the end of the term. So lease options are a great way to get the property under contract and then possibly buy it down the road. You could buy it and then flip it and sell it again. So there are different options with that. And then Tim touched about
Yeah, we've talked about Airbnb arbitrage. So we'll move on to the last thing, how to acquire multiple properties is start doing multiple real estate investment strategies at the same time. So you could have a buy and hold property. And then if you're kind of at the end of your mortgage qualifying ability, start doing Airbnb arbitrage, start doing lease options, start doing rental. So while you're doing these both 2 or 3 of these strategies at the same time, you're building up your cash to buy your next one, your next buy and hold.
Yeah.
So do more than one thing at the same time, or get into larger projects. Like as I talked about syndication a bit there. Again, we do a whole seminar on that, so we won't touch too much on it, but it's when you get together with a bunch of other investors and buy small apartment buildings. Mm-hmm. There's many ways you can do to either boost your cash flow coming in, your income coming in so that you can buy those properties, or do all these strategies at the same time. I mean, it's a lot of work, a lot of management, don't get me wrong, but it can be done.
Yeah, we just recommend that you work with a good team. Hopefully it's us. Just to help you guide you through that whole process and work out, starting with your goals and then working out an investment plan and then moving forward, taking action and then actually doing multiple things at once. It does sound crazy, especially if you're just starting off, but if you're like us, when we started, we wanted to own as many properties as we could. And now we're helping our clients do that the right way. So working with a team is a key part of doing multiple strategies at once.
Yeah, and the final piece of advice we can give you is don't quit your day job. We've had so many investors who get 3, 4, 5 rental properties. They got a lot of cash flow coming in and they decide, well, you know what, I'm going to be a full-time real estate investor. I'm going to quit my job. And then they may have to sell one of the properties and their cash flow isn't that much to live on, or they try to go buy another property, but they don't have the qualification behind them to buy another property. Now you can quit your day job and live off your rental income, but as we said at the beginning of the seminar, it takes time. We do have investors that have retired or quit their jobs, but they have been in the real estate investment game for 25, 30 years, and they're making so much cash flow that they can use that cash flow from their rental properties to either live out their retirement or even buy more investment properties.
And what we love, honestly, about real estate is it can help you do the job you want to do. Tim and I weren't realtors before. We became investors to actually do the jobs we want to do. And real estate has helped us definitely do that. So don't quit your day job. Put a plan together, start the process. Hopefully work with us and move forward with it.
Yeah, and have a good time doing it. This doesn't have to be a serious investment strategy or investment game. Azad and I have fun every day when we're out with clients buying properties. We joke about some of the funny ones. We have funny stories to tell about the properties we've been in. Have fun while you're doing it. It's a way that you can make a lot of money, but takes work. So have fun doing it. Don't stress yourself out too much.
Yeah. Okay, so we promised you one of our free books. It is a download. All you do is you go to, I'll put it in the chat there. You go to crewinvesting.com and there is a free book. This goes through the core fundamentals of investing in real estate, 1 million reasons to buy real estate. It goes through things like property cycles that you need to understand when you're buying real estate, what the market's going to do. It does go up and down, but over the long run, Tim, the 75-year average has been about 4% growth right now. And that growth, if you take a $400,000 home times by 25 years, that property will be worth $1 million at the end of 25 years. So it doesn't sound like a lot, as we said, the market right now is going crazy. The townhome market is up 19%. Condos are up, I think, about 15%.
Yeah.
And then single family homes are up around 11%. So, you know what? There is some serious money to be made. Don't feel like you have to get in straight away. If you're not ready, we would rather you continue to learn through our free education. This is a free book. I just put it in the chat there, crewinvesting.com. You can go in there and download that free ebook. It's a great read, and it will get you excited to buy real estate.
Yes.
Next is our book called Fearless Real Estate. We love this. You can see we have a whole bunch of our clients on the cover of our book. The reason why we did that is we want to showcase to you how our investors have moved forward. We've got all different clients on here doing things like joint ventures and rent to own and flips, and you get to learn how they move forward step by step. This book, we're getting a lot of great feedback. We wrote it about 3 years ago now, Tim, and it's doing very well.
Yeah, and it's got stories about our clients, doing all the different real estate investment strategies out there. Like Azad mentioned a few of them. It's stories about them. It showcases their success. It's not all about Azad and myself. It's about how our clients are seeing great success and making huge sums using real estate investment as their investment vehicle. So it's a must read as well.
Yep. Next, we're very happy to.
Just a second.
Oh,
Went too far. There we go.
Okay, we're very happy to showcase that our membership here, Calgary Real Estate Wealth. You don't have to do the membership to work with us, but you know what? The investors that are doing it end up buying multiple properties. And the best thing about it is that it comes with the property management piece. So you basically get all of the mentorship. There's over 100 hours of content that you get to log in. And Tim, you get to learn on your own time anywhere in the world. And a lot of the things we talked about, we go in depth, like vendor take-back loans, how to get the seller to provide financing for you so you don't approach the bank. I know Reg was asking, how do you get multiple properties? You have to be creative. And the investors that do own multiple properties, they're doing exactly that. And the best thing about this is it gives you peace of mind investing. For the investors out there that don't want to manage properties, that don't want to deal with tenants, it's $97 per month. We manage those properties for our clients. And it's cheaper than most other property management companies. Most companies charge 10%, Tim, on average.
On average, yeah.
To rent your properties out. This is $97 per month. We never want to make money from this. We make money when we buy and sell real estate. And this just complements what we can provide.
Yeah, so we provide all those property services so that you can be hands-off as a landlord. And it's a service that we wanted to provide to our clients. And it's included in this membership. Not only that, you get all the forms, guides, contracts, everything you need to run your real estate investment business. It's all here in one place, and it's all under that $97 a month cost there. Okay, so that's one more thing.
Yeah. So if you want to see what our investors have been up to, and if Calgary Real Estate Wealth is for you, simply go to our YouTube channel. If you just Google Calgary Real Estate Wealth, it will come up, and you can see real people telling their story on how it's changing their life, and how it can change yours.
Yeah, so log on to that YouTube channel, and you'll get client stories and interviews, and it's a great resource if you want to find out what other real estate investors are doing right here in Calgary. Okay, so what we want to do is we want to help you.
Yeah.
How are we going to help you? Just reach out. Email is the best way. We can meet with you one-on-one in our office here, and we can figure out where you are right now in your real estate investment journey, where you want to be, what your goals are, and we can set you on the right track to buy multiple properties. Start with one, but we can get you 2, 3, 4, 5, however many you want.
Yeah, I hope you liked it. Don't miss our seminar in 2 weeks' time on the townhome boom and how you can profit from it. We're going to go through what areas to buy in, what types of townhomes, why they make sense, and why you should be investing in them. That's in 2 weeks' time on August 6th. Enjoy the rest of the summer. Stay cool out there because it is hot.
Yep.
And we hope you liked it. Please do go to work tomorrow and tell your friends about us. We hope to see you in 2 weeks' time.
Thanks for coming, you guys. Bye.